Well, I think you guys all sound amazing and you look amazing, and I'm super stoked to join you guys. I don't
Don't
normally get
butter
to
us
drink
up.
on
We're not a piece
weekdays,
of bread.
and I went
Those
out
are
and bought
the
2 beers and a double shot of Angel's Envy for this. So,
those
Ooh,
Damn.
it's
those
a
are the
great day.
same
nice.
those are the same skills he uses everybody when he goes in to present for that Series E funding.
Yeah.
Slick, slick.
I mean,
Brandon, we're ready to rock.
In the 401k
God, we're still
grind,
doing
changing
this,
the
huh?
game with a beer in hand, unwind. Unwind, nerdy chads, gotta swing like a pro. Road guys teeing off in slippers, let it go. Silent J, yeah, he drinks and he knows what he knows, man. Nobody knows. Jay Dizzle's in a Lambo, neon green revving up the future. It's a retirement dream. We're the Retireholics. Crack a cold one, cheers. Rewriting the rules, been at it for years. One beer at a time, yeah, we're changing the scene. Golf carts, Lambos, and a pensioner's dream.
Justin, take it away.
Bra-
Who we got?
Real quick, Brandon, I think we need to add JD falling in Missouri off the table that
Yes.
one time to that video.
Oh yeah, that'd be a good one.
Yeah. Anyways, all right. He's JD's newest wet dream, the offspring of Kevin Bacon and Ethan Hawke, and arguably a more impressive brain than the likes of Nerdy Chad, Josh Hitzo, Nevin, and Fred. Sorry, Hack, you didn't make the cut. He's a serial entrepreneur, a math geek, a largely self-taught software engineer who has always viewed himself as a bit of a hacker. Started his first company in 2005. 6 years later, started a second company that grew to $4 billion in assets in just under 6 years. And here today to talk to us about his newest venture. But that's enough for me. Jason, we're going to hop into a new segment called Rapid Fire. I'm going to ask you a few questions. You get to respond with only one word and one word only. There's no explanations or anything else of that matter. Are you ready?
let's do it.
All right. So what did JD bribe you with to be a guest on the show?
Beer.
It's good answer. Good answer.
What was the favorite party of your Mexico vacay?
Beer.
Hey, Jason, by the way, these answers are supposed to be rapid response.
Yeah, I'm like, one word's hard. Ocean.
Okay. Does Nate Moody have a hot sister?
Of course. That's 2 words.
If if you could punch any celebrity in the face, who would it be?
Mm. Geez, so many. What was that guy that was on Jurassic Park?
Goldberg, or what?
No, like the new ones.
Chris Pratt.
Chris
Yeah, that guy.
Pratt?
Oh, geez.
You asshole.
Wow.
What an asshole.
I did not see that coming. I need to know why.
Nicest
I
guy
don't
on
know. It
the
just seems
planet.
really annoying.
Like a
Really,
this is a punchable face.
Sorry, Justin.
That's pretty good. No, that's good. That's what I want from these. And for a good buddy, Grant Ellis, chunky or creamy peanut butter?
Oh, peanut butter for sure. That's more than one word, but you led me.
Chunky or creamy?
Creamy.
Oh, you said creamy. You didn't hear that part. So,
Yeah.
All right. Well, there you
Okay.
have it, folks.
I feel like we
Take it
know
away,
him
JD.
better. Yes, I like this, Justin. I feel like it's evolving well. This is a new bit, Jason, we're trying out, and I like it. I like it. All right,
I think
everyone.
we should just make our entire show that for an hour straight.
One word answers.
Yeah.
This has been another episode of Retireholics. Thanks for tuning in, everyone. We'll see you next time. We got a lot to cover today. So I was going to kind of run through it all, but fuck it. Let's just get right to it. But before we, not to piggyback on Justin's intro, but let me fanboy a little bit. I said giant guest alert out on the interwebs. Like, this is true. I know we have a lot of 401k people here. And so maybe you kind of don't know Jason, but he created, I heard his name literally 10 years ago, where if I was falling in love with your folio, fucking formula folio shit you were doing, whatever that was. And I was like, wow, this guy's really like, people really like, advisors specifically really like what he's doing. And then Altruist, like, your freaking only what, like 8 years into this thing or whatever, and already people are talking about how you are challenging Schwab, challenging Fidelity, challenging Pershing as, listen up everyone, a custodian platform, Altruist. So 5,500 plus fucking clients on this thing, advisors. I mentioned online, a valuation approaching $2 billion. So this to me is going to be a fun night. We're going to get in deep on some stuff, and super excited to have this dude here. Jason, we do play a game. It's called AcroSyn. I know you've got some jet fuel with you. So if you say any acronym or initialism besides my name, you must take a small sip from your jet fuel. But we also are adding the prohibitive word. So a little collaboration here with AcroSyn. And the prohibitive word today will be, I wrote it down, advisor. Okay.
Again?
So if you
Again?
oh wait, I had a different one. God damn it.
Artificial intelligence?
I had a different one. We did financial last time, no?
Oh,
No.
we did advisor.
No, we did advisor.
Okay, let's do financial tonight. Financial.
Deal.
Financial.
Okay.
You must drink from your penalty drink. Let's get right to it. Vestwell announced very recently that it has raised $385 million in a Series E funding. Chad, can you remind everyone the day that we met with and sat with Aaron Schum and he shared his vision for this company to us? Just the three of us?
You try to make it sound like we weren't supportive when he shared that with us, but we were supportive.
Were we?
We were supportive under one avenue. When he talked about creating a record keeper, we're like, yeah, it's not gonna fucking work. These big cruise ships will steer you right out of the water. But then when he talked about being the technology behind the record keepers, that's when you were like, ooh, so you want to replace the cruise ship? That makes sense to me.
Jason.
So he
Chad's
sat us
lying.
down, Jason, and both JD and I were like, oh man, poor guy thinks this is gonna work. It's gonna suck. But there was one component of it that we thought that could work.
I don't know. That's not how I remember it, Jason. He sat us down and he walked away, and I looked at Chad, and Chad looked at me and he goes, I have no idea what that guy's fucking talking about. Like, what is he gonna do? And I was like, yeah, he's gonna fall flat on his face in this industry. He has no idea. I think obviously Chad and I were totally off base. But I want to go deep on this $385 million funding that he's getting here. And so pay attention a little bit, Jason, because I know this is a bit out of your area. He raised $385 million in this Series E. I know you've done something similar somewhat recently, like a year or two ago, which it brings him to a total capital raise of $660 million. With this funding, Vestwell said it's going to expand its distribution across all channels where income is earned and benefits are delivered. That seems like a smart place to deploy the money, but I love news clips that these companies put out. But Jason, you're the perfect guy for this subject. I've always been baffled about this Series A, B, E, Z, Silicon Valley venture capital kind of stuff. It's not my thing. I want to understand the math a bit. I took over a family business from my father, and we're in our 51st year, and I was taught to keep my overhead lower than my revenues, AKA, I'll drink, generate profit, and not to take on debt. Boring, I know. So please, Jason, help me understand this world. Help me understand Vestwell. As a 401k record keeper, they've got 200 million in annual revenue, but they go out and get another 385. To me, let's assume I'm a $5 million revenue company, which is pretty close to what I do. Small potatoes compared to the stuff that you guys do. If I ran out and got $7.5 million in investment money, bringing my total investment to 16 million, I think my wife and people around me would be very concerned about my how I'm running this business. So take it away. How does this shit work?
Yeah, man. So So first, yeah, I've met Aaron a couple times, and
Oh, good, good.
yeah, he seems like a really great guy, very smart, and
Snappy
probably
dresser.
yeah, yeah. He always is wearing a vest every time I've
Yes.
seen him. So it's like kind of it seems ironic, right? Yeah, given him his company and
That's
one.
well, we get it.
Yeah, yeah. Dun, dun, dun. Anyway,
No, no, no.
yeah. So so basically, I think so. I think early on, like in those early stages, like the ABC, kind of maybe the AB rounds, like those first couple rounds of financing, the thesis is usually how big could this become? So basically, how big is the market, and is this entrepreneur good in their founding team? Like, could they build a good team? So so often, obviously, in the first financings like seed, Series A, and so forth, there's no business, there's no revenue, there's no profit,
Just an
there's no
idea at that
product.
point.
Yeah. What did I acronize?
F word.
That's where.
F word.
I don't know.
Oh, you said the actual prohibited word. You didn't
Yeah.
say an acronym.
Oh, and you can always, by the way,
I said the-
You can
Well, I took a
always-
sip of the jet
So
fuel.
can we
Amazing.
really quick? Sorry, I do this all the time. Can we pause this real quick? It's any
No.
iteration of, right? I'm going to say the word, but none of these count. This is true.
Yes, they do.
No, they don't. I got to verify. Fine. It can end with E. It can end with S, right?
Oh, yeah, yeah. Oh,
Yeah.
really?
Okay. So I'm
You
not
can
going to say
make
any
it
more then.
plural, and it's okay.
ING, like it's still got the basis, like it's the word is there. Okay, just making
the
sure.
quarter of the word. And Jason, you can continue on with your thoughts. We get a penalty. You don't
I'll
have
be
to
more
stop.
succinct because if I use more words, I'm more likely to like douse this,
I guess
angel's
what
envy.
I'm kind of asking is when I get the whole startup thing, like, hey, we need some money to get this thing going.
Yeah.
Totally understand that. And I also understand the vision of the future, like what does the market look like? How big could this thing be? Obviously, the charisma, intelligence, work ethic of the founder would be important. That all makes perfect sense to me. Like that doesn't confuse me. What confuses me is when something's been in business for several years at this point, and has $660 million invested in it and is doing 200 million in revenue. So I guess let me give you some specific questions. Like the people that put the 660 million in, I'm assuming they want to get that money back
Oh, yeah.
with a return of some kind. And I'm assuming they'd like that return to be somewhat better than like if they would have just invested in the stock market. So tell us, what do they think that return should be? Should it be 2x, 3x, 10x? When do they want it back? And if I'm a company like Aaron's and I'm doing 200 million in revenue, where do I need to get to? $1 billion in revenue to get those people back their money with some interest? Like,
Yeah.
I'm just confused.
Yeah. I mean, great thinking. So yeah, you hit the nail on the head. Like the early rounds are just like, hey, is this worth even pursuing? The later rounds are all about expansion. So so to get kind of semi-precise on this, what I'd say is at 200 million of reoccurring revenue,
Yes.
that business feel like went to market today, like IPO or said, hey, we're for sale, is probably going to trade at like 6 to 8 times revenue.
6 to 8 times revenue. Okay.
Mother effer. This is going to be a long night,
No, that's good. That's good info. 6 to 8
At
times
least it's
revenue is where the
645 in Texas.
valuation would be at.
Yeah, so obviously if someone put money in at that price, they want a pretty big IRR. Mother, I caught myself with that one. Anyway,
That's going to happen a lot.
yeah, I guess you guys are more old pros than me on this, but suffice to say, like the return they're going to want is likely somewhere around 25-30% per year.
Yeah.
And so
Can you tell us what that last acronym you said stands for? Because
internal
don't
rate
forget,
of return. Yeah, internal rate.
we're
of return.
dum-dums, buddy. We are
Yeah,
dum-dums.
you guys know what that is.
Yeah.
What's the time frame on when they want to collect that?
Yes, so every
right from the
investor is
start, or
different.
like-
If you take late stage private equity money, they're probably looking at like 5 to 7 years at the long end.
Yes, this is what I've heard.
Yeah. And some people will have a longer horizon than that. It kind of depends on where the capital came from. So if you're, but yeah, most likely they're looking at it and saying, if you want to get a 25% compound annual growth rate, to make sure I don't, get the wrong acronyms here, yeah, they're going to have to go to about 10 billion in value. And in order to do that, they're going to have to get to maybe $1 billion to $1 billion in a quarter of revenue.
So the dumb surfer was not far off. Like that is where he needs to get to. I mean, I love Aaron. We've had him on the show. By the way, I'm a fan of Vestwell. I have not attacked Vestwell the same way I've attacked Guideline and Human Interest and some of these other firms. But that's a big ask, I feel like, for those guys to get to $1 billion plus. But here I am talking to someone who's done some great things.
I think, JD, there's two issues perhaps with the way we think about it. If I asked you to borrow $1,000 and you thought that it had promise, you'd probably give me $1,000. I think 600 million to these multiple levels of investors, these venture capitalists, it's not a big drop in their bucket. So
you're just saying they're willing to lose.
They're willing to lose. I think Tony said in the chat bar, like they're trying to hit 1 of 10 or
there's a power law, they call it. Yeah, that's it. So the basic gist of it, and this is why they want to go after big markets. It's why like somebody could have a pretty solid idea in our space. Let's say someone's like, hey, I'm going to build this killer whatever, like tax planning software, and you're gonna just standalone, and I can make this thing 10 million of reoccurring revenue and 5 million of EBITDA. Here's my business plan. It's bulletproof, blah, 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 blah. And
earnings before intro tax, whatever,
I don't know what I just said, but EBITDA.
I'll drink EBITDA.
Profits. Whatever. But you get the idea. That's a serious man, whatever.
That's how I do it, buddy. Vodka's a close friend of mine in life.
Yeah. So anyway, that's not a very fundable idea, right? The one I just shared. Like most
I was ready to buy in on that.
Yeah, listen, I mean, again, us normal people would look at that and say, that sounds amazing. But these venture investors and private equity investors, sometimes they'll raise funds that the fund size itself is $1 billion. Right. And their expectation is that they're going to return, like what they really want is a 10x return on the size of the fund that they raise. So if they raise $1 billion, they want to get 10 billion back. And now if you're going to try to do that by buying pieces of 1,000 small businesses, you spread yourself so thin. So what they'd rather do is have 1 or 2 companies return the entire fund, and like 50 to 80% literally will get written down to like basically zero. Like they'll be total busts. Yeah.
And what you just explained actually does happen too, right? There are definitely like private equity firms that invest in a bunch of smaller companies and try to make that work. But you're just giving us this other example of the guys going for the big home run. Because I do know there's these private equities that gobble up, hundreds of companies, thousands that do 5 to 50 million in revenue and try to make that type of shit work. Let me ask you this though. I'm thinking that even your model, Aaron's model, the guidelines, human interest, and again, in our 401k space, I've said this before on this show, but you confirm if I'm on the right track here. These investors, venture capital, whatever, when you look at companies like Fidelity, Schwab, whatever, all the Wall Street companies, these are like companies that have been around for centuries, a lot of them. Like this is the legacy, old guard. And don't those investors get excited to think about like that someone could actually in some short period of time stand alongside those companies? Like I think maybe 15, 20 years ago, you think like that's impossible. There's no way, like even for your firm, like an Altruist could actually be mentioned in the same sentence as a Schwab, or a Fidelity. And so I'm imagining they open their wallets a lot quicker if they feel like there's an actual pathway to that.
Yes. So speed is part of why some entrepreneurs raise a bunch of money, because you're totally right. In order to build, like, for example, I was chatting with Bill McNabb, who is on our board. He was the former chairman and CEO of Vanguard. And he had this interesting stat we talked about, which was that,
by the way, Mark,
Chief Executive Officer.
I also think you should drink
that's not
that was kind of like a humble brag / plug, wasn't it?
A little
I was
bit. A
validating the
little bit.
source. So people would believe I'm not making this up, because you never know, right? But so he was there. But one of the things he said that was really fascinating was that in the 60 plus year history of Vanguard, they effectively just compounded at 22% for 60 plus years.
So not a
And
massively fast growing company, but just a
it
steady
doesn't
one.
sound that crazy, right? And then he kind of acknowledged that almost half of those returns came from the market, right? Like it was
Right.
like, I don't know, 9% of the 22 was just the market going up for 62 years. And then he wanted to further say that in their best 10-year period, their growth rate was only about 40% per year. Right. So it's not like they ever had like some of these growth rates you hear companies 2, 3, 400%.
Right. Right.
They didn't, that wasn't a thing. So you're totally right. I think in the age of building a real business, like my last two companies, I self-funded them, and it was really hard. I had to pour every dollar back into them in the early, just keep them growing fast. So if you have a great business, if it truly is growing really fast, then adding capital to it will make it grow faster, presumably. Again, only to the extent that the unit economics actually function and make sense. So like if you again, like hypothetically, I think you read like their press release, something like, hey, they're going to put this money into go to market or something like that, right? And expanding their services across different channels. So presumably, let's just guess for a minute that for every $100 they spend on go to market, selling and marketing, and onboarding. So if they do that, they can earn that back within 18 months. So they'd have what's called an 18-month payback, and everything after 18 months hits, it'll produce some level of gross profit. And if they're able to have a lifetime value, I presume, the 401k business to me seems like one where the lifetime value is great. Like people don't switch every day. You keep these plans in place for a long time. You've
For
got a bunch of
steady. Yeah.
natural tailwinds, people making contributions, markets going up. So I think there's probably this notion they have where, look, if you secure a plan for 10 plus years, it's going to be very valuable. So if we just pour more money in to build the plans, plan base larger, get more, contribute, people like participants that are making contributions. That's the notion. My guess is right that these new investors are
Yeah,
just
but
saying, hey,
can
the
I stop
economics
you?
make sense.
Can I thank you, Justin. This is a new year, a new season. Can I stop you with that
Made me liar.
you said earlier that a lot of these fail. A lot of these concepts with all the investors, with the great entrepreneur, with the great concept, like it doesn't work out. So, I mean, the fact of the matter is that it's difficult and it's hard to do. So I guess I should just learn from my own fucking comments here. Like people are going to lose money on some of this shit. Like they're not all going to work out.
Well,
So
to clarify, by the way, the fail rate's really high early. Once you get to a late enough stage, it's pretty proven out. So I would say, from my own experience, once we reached, probably the like Series D stage, the risk of us failing was effectively zero.
well,
And it was just a matter of how big.
but Jason, define failing. Like, so like
Meaning
I
no
could,
one was going to lose any money. Meaning like an
yeah,
investor could put
right.
whatever money they put
But it
in.
is a
The worst case
failure.
scenario is they weren't going
Yeah,
to lose
but
any money.
it is a failure if I give 660 million and I don't get a return on that investment. Like,
Yeah. Well,
right.
keep in mind the early investors there have already made huge returns, right? Because I'm
Okay.
sure that whoever invested early. So normally, this is not just, I'd say, a general rule for people if they're not familiar, is like um, typically a good founder that's confident in their business does not want to take more than 10% dilution in those later rounds. So they might give up 20 or 30% in their very like their seed and their Series A. But once you get some good traction and you're like Series C, D, E, et cetera, if your business is doing well, you don't want to give up more than 10%. So maybe 15. So what that would mean is like, again, if you raise $300 million, you're probably giving up 15% ownership. Those earlier investors, I mean, they've come out amazingly, right? They probably came in at like
If you
100
get that
million,
far,
150,
yeah.
200 million.
If you get that far along and you were an early investor, then you've made your money before we actually get to the finish line and figure out what's going to happen. Are you familiar
I
with
think
the
Oh, yeah,
guideline
it's
Gusto
super
deal?
familiar. Yeah.
In your opinion, like, do you think that was a success? for a guideline and the people who invested in guideline? Take away the early investors.
The late stage, no, it was a bust.
Yeah, right.
They probably lost a little bit of money, not much. So keep in mind, so all of these investors, they're coming in as preferred investors. So that means they get their money back before the common investors, the founders, the employers get a penny. So they probably didn't lose money, but they just didn't make any return. So for example, in the case of like, I'll use
Better than
Vestwell.
going bust. They not what they wanted, but they
Yeah,
got their money.
they're not getting a big return, but like in Vestwell and Altruist, we both raised similar amounts of money, about $650 million. If we sold our businesses today for $700 million, the investors get all 650 first, and then the other 50 million gets shared pro rata, meaning like the founders and employees get damn near nothing, right? So there's a big risk in taking a whole bunch of money. You're
So
building what's called a pref stack, right? It's a mess.
in your current model with Altruist, which it does kind of mirror Aaron and Vestwell in some ways, slightly different, but and you stop me whenever I pry too deep here. And again, I'm actually rooting for you to live another 30 years and be a name alongside Fidelity and Schwab and Pershing or whatever you end up doing. But so I apologize for having this conversation, but what's your current ownership in the company is what?
Mine's about 20%.
20% at this point. Okay. And so if all things didn't go perfectly and everyone had to sell, you still do okay for yourself, right? I'm getting real personal here.
Yeah, I mean, I think I'll be okay. So keep in mind, I've also invested a lot into Altruist. So I'm also a preferred investor, and I invested early and kind of later. Like I invested all the way up through the series,
as you should be.
the Series D. I think I put like $3 million in, even at the Series D level. So I was investing all the like basically, from start to then. And so I've been accumulating shares. I've never sold any shares, right? So like so I think it depends on every founder's different. But I built two companies before, sold them, did reasonably well. So my motive is different than other folks. Like some founders actually, they take a bunch of liquidity early. Like they'll sell because you'll get offers. Like certain investors will be like, I want to invest and I'll also buy 5 million of your founder shares or something like that.
Shares, yeah.
Right. And so some founders, like they take that, totally understandable. They want to de-risk for their family a little bit. But then when all the dust settles, all of a sudden they get to like the liquidity event and they own like 5% of their company, and it's like, I don't know, if it's a huge enough denominator.
Yeah, right. If the number gets bigger and bigger and bigger.
Yeah.
This is fascinating for me. We can move on.
Hold on.
Real quick before we move on.
Go ahead, Justin.
Were you going to do what I was going to do?
Well, it was part two of what I mentioned earlier when I said there's, I think, two things that we need to know. One being that these dollars aren't huge dollars in the eyes of these venture capitalists. The second being, in order to get another seed of funding, Jason, I have to imagine you're sitting down with these people and saying, here's how we're going to continue to grow. Here's the other markets we have not touched yet. Here's where future revenue is going to come from. Most of these, like when I look at Vestwell, they're not continuing to do the same thing. There's other lines of opportunity out there. So that led us to Nate's question, which is, from your point of view, how does Vestwell go to these investors and say, with my access to these participants, with my access to data, with my access to these assets, here are some other avenues that we're going to make money on. So give me another $300 million.
Yeah. Well, I think, I think probably the biggest winner in the guideline deal was Vestwell.
That secondary book they got.
Yeah, what is
30,000 plans.
A bunch of those plans.
And
wow, I didn't know Jason. By the way, kudos to you. Clap, clap, clap. I didn't know you're so well versed on our side of this whole financial chessboard. I thought you were just a registered investment advisor, wealth manager focused guy. You know our shit a little bit.
Well, I mean, not it's it's like very minimal comparatively.
No, it's good.
But
that's good.
I love the space, man. It's a good space.
Yeah, no, that's cool. That is a very interesting thing that's going down in our industry, that whole acquisition and how that panned out.
Don't let them off the hook, JD. I want to hear some sort of an answer there.
Sorry. As far as how to grow, like how they grow. So here's the thing that like, by the way, I think that, this is going to sound like maybe overly simplistic, but I think the first thing is, I don't know what their total assets are. Do you guys know what their total assets across all their plans are at Vestwell?
At Vestwell? Oh God, I had that info.
I don't.
Like 20 billion or 30 billion or
I'll find out for you. Continue on.
yeah, let's just assume it's 20 billion. I don't know. It could be higher. It could be a lot higher. It could be double that. I don't know, but let's just say it's 20 billion for simplicity's sake. I think the first thing is like if you just look at simple compounding, I think their presumption is the average plan participant is putting whatever 5% in. Some get a little match, some are getting some level of, like most people are still working, so maybe they're more aggressive and their plans are growing at blah 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 8%. But anyway, you get the gist of it. There's probably this like basic assumption that they can just wake up and every year it's going to grow by 20% a year. So it's going to double every 3.5 years. So if we use a 10-year time horizon, let's just say it's at 20 billion, the 20 becomes 40, becomes 80, becomes 160 billion in 10 years. And I don't know what their monetization is exactly, but I'm going to presume it's somewhere like around 25 to 30 basis points.
Are you talking about like their profitability?
No revenue, just what's the revenue on the top? Like how much, you talk about the 200 million of revenue.
Because we haven't talked about that yet, Jason. Like obviously your profitability is a factor here, right?
Yeah.
I mean, whether you're making 20% or 15 or 30 or 40 or 50, like that's a huge
Well,
variable.
that was my comment to Nate though, Jason, in the chat bar, is that they aren't tied to the assets as much as most modern, I'll say modern day record keepers are.
Yeah.
They have a flat base fee and a per participant charge. So when they go from 50 billion to 100 billion,
Doesn't matter.
yeah, they have some sliver in there, but it's not enough to move the needle. It's definitely not 25 basis points. I'd say it's in the range of 2 to 3.
Yeah, it's interesting because I mean, I was just kind of backing out the math, and I'm like, if you have 200 million of revenue, if you were to calculate it in basis points, hypothetically, um, if they're only making 20 basis points, they'd have $100 billion in assets.
And then we thinking they have 50 billion.
I think they have closer to that. So they're actually monetizing at closer to 40 today. And so the assumption is like, again, like even if that number goes down to 25, but those plan assets, again, they double 3 times in the next 10 years, they're going to have like $500 billion in assets.
But again, to Chad's point, they're really not tied to the assets. They're more tied to
No,
the
but he's
headcount.
just saying if that's their margin now, why would they not maintain that margin?
They're going to get some asset base
because their
revenue.
margin's based on headcounts, not necessarily assets. So if the market goes up, their revenue doesn't necessarily go up as much as your legacy record keepers. You know what I mean?
Yeah. I mean, I'm actually, I have to dig in a bit more. I mean, because
Yeah.
I actually have a guideline plan for one of my small businesses I own, and I mean, I'm pretty sure we're paying asset-based fees on it, like in addition to like a plan fee and a per participant fee.
I'm sure there's a custodian fee. I mean, that's your world. There's investments that are asset-based, for the expense ratios, but Aaron's model is less of the asset-based, right, Chad?
Yeah, the traditional model. They did a bunch of
100%
state-sponsored. They did all these like kind of state plan things, which were kind of unique.
I can't imagine
plans. They're also the private labeled record keeping chassis for a bunch of different companies. So they're getting monetized in that way for the technology they created.
But
Again,
where the profits are going to come from, JD, is basically like again the essential assumption, which may not be correct, right, to your point, right? This is what these investors are assuming when they're doing their math. Is their assumption is they're like, okay, these are largely fixed cost businesses, but the revenue expands, and therefore they have expanding profit margin over time. In other words, because like if your cost is like based on if the unit cost is tied to a plan participant or a plan itself, and your revenue expands at a faster rate than does your expenses, your cost per unit, you have expanding profit margin. And their assumption is like, look, over some amount of time, you gain scale and you'll have profits, right?
I think what we were all trying to get you to say, Jason, because the inside track, is what we've been trying to get someone to say over the years, which is this ability to monetize the participant, the ability to sell services. I mean, Vestwell says it very clearly in their statement. They're going after more than just 401k benefits now. They're looking at health savings accounts, emergency accounts. They're probably going to end up getting into some sort of employee benefit on the health insurance side. Like there is a million ways, and JD, you've heard me say it for
they're already doing some of that.
It's access. They have access to these businesses. They have access to these participants. And they have access to these advisors.
This is great.
The profit's going to come from.
I told you guys in our kind of private email that I would just kind of see where the wind blows us, because I wasn't planning to spend this much time on Aaron's thing, but I like it, and let's let it go. So I want to learn a little more about Altruist in the sense that, Jason, like, what is your goal for the company? You've had this like quick growth, I would say, very quick growth year over year over year. You're obviously very popular with the RIAs, and I say that on purpose because I want to take a swig from my vodka. But I'm thinking your model too is a one that you've always been a low cost guy. You were kind of going against the legacy establishment. So do you have bigger visions? Oh, geez, I'm stepping right into this. I don't want to talk about Hazel yet, so put a pin in that. But for Altruist, the custodian alone, do you have bigger visions for that company to generate revenue in other ways, or you always try to be just a very cost efficient, high tech custodian?
So the short answer is yes. So we're kind of interesting. I don't know that a lot of people know this, but I always, if I'm asked, I'm always pretty transparent about it. But again, if measured in basis points, we generate more revenue per dollar on platform than either Schwab or Fidelity or really any other custodian. Um, and uh, and so there's a number of reasons for that, but one of the biggest reasons is that the custodial point is a vertically integrated platform. So it's a clearing and custody, software, asset management, right? So there's all these different kind of layers. And the other thing is that because we're all digital in nature, when accounts are opened, it's a lot easier for people to opt into additional services, right? So for example, we have the highest opt-in rate in the entire industry to what's called fully paid securities lending, um, which are basically stock loans, if you will.
Yeah.
And it's like, I mean, it's like multiple orders of magnitude higher than any other firm. And the reason why is because it's just a box you can check. Do you
Yeah,
want to
it's
get
the
extra
ease.
yield?
It's
Yeah.
the user experience, the ease of the.
100%. Yeah. And the same thing can be true about, again, any number of other things that a custodian could do to earn revenue, margin, et cetera, et cetera, et cetera. Like all these things are, like things that we do. So, and then we integrate all these things. So we do quite well on asset management. Each layer, if you can imagine, we actually price probably 60 to 90% cheaper than anyone that's a standalone company. And so the kind of the magic of the model is that we're not just a custodian or just a software company or just a model marketplace for asset managers. So each one of those things becomes a revenue center, and our costs are largely fixed. So, like in other words, like there's a fairly static cost
So
per account
your
and per.
answer to me is no. We don't need to do new different things. I'm
No.
sure you'll evolve, but you're saying we just need to grow with our current thing in terms of revenue.
You have so many pokers in the fire in terms of levels of profitability that the market is vast for you.
Well, and you're still small, no offense to Schwab and Fidelity, right? So you can still grab more market share from them in the coming years, I'm imagining.
Yeah, totally. Yeah.
Can I ask you a question? You
yeah.
seem very I didn't drink my vodka for this. I'll drink twice. You seem very RIA focused. Is there something stopping you from doing big custodian deals with like national broker dealers and stuff?
Yeah, so the broker dealer business, to do that, you'd be registered as what's called a correspondent clearing firm. This is like Pershing and National Financial and those suspects. I think RBC.
I would think that would be fruitful for you to like do a big deal with them.
Could, yeah. I mean, so we will do correspondent business, but probably a bit unconventionally. Like for perspective, I mean, the entirety of the independent broker dealer channel is maybe $3 or $3.5 trillion in assets. And the RIA channel, well, I guess we have to drink another acronym.
Is how much?
Is a $10 trillion. So it's three times bigger, and it's growing faster. Yeah. And the other thing that's wild is you think about it, 80% of that market share is two companies, it's Schwab and Fidelity, and they both have NPS scores under 20. So these are not like loved companies.
Can I divert for you?
Motherfucker, by the way, I just did another acronym. Net
You just called yourself out. Mark didn't even pick up on it.
Let me bring up something I've been wanting to say on the show for a long time. So Schwab, you're saying it's so successful, so big with advisors. Don't they pretty much shit on advisors on TV? Like, aren't there commercials all about like financial advisors being rich fuckers that steal money from you and that you should go to Schwab instead?
Yeah, I mean, it's a strange dynamic, I guess.
Why do advisors do business with them if they totally crap on them on TV?
Yeah, when you have a, sort of like an oligopoly, there's not a lot of other choices. You have to keep in mind that to work with Fidelity, it's not exactly a walk in the park, right? Like, Fidelity typically is going to say, we're not even interested in you if you don't have at least $100 million. And in the registered investment advisor world, there's about 40,000 firms. 50% of those firms are under $100 million in assets, but collectively they still have $1.5 trillion. So if you're half of the market, Fidelity's not even accessible, period. And then if you can make the minimum, you're going to be treated basically like a complete
Wow.
flunky because they want you really to have 500 plus.
These are the building blocks to your business model right now that you're laying out. This is why you did what you did.
And as I hear Jason talk about this too, and I think of the evolution for that community, for the registered investment advisor, has there ever been a better time to go down that path, to leave a broker dealer behind? I don't think there has been. The broker dealers hinder so much the use of modern technology and artificial intelligence.
Well, we're going to talk about AI in a bit. So
I think there's no better time than now. And I opened it for this to be a registered investment.
It's certainly a one-way street. So this is something I'd be curious if anybody listening or if any of you guys know. I've never heard of somebody who, after going into the I'll just
being a registered investment advisor goes back to
the RIA channel.
Are you saying being a registered investment advisor goes back to a broker dealer?
But no one goes into that channel and then decides like, man, I want to go back to Cetera. That sounds like an awesome life.
No.
It never happens, right?
But my compliance officer was so fun back at that broker dealer. They were great to hang out with. I'm kidding. I'm just a bad joke.
No, you don't see it.
No, you don't.
That is very interesting. Let's keep this moving along. I'm going to get stuck in this which is great in this conversation. On another headline, we talked about Aaron Schum and Vestwell and billion-dollar valuations. So speaking of billion-dollar valuations and awesome entrepreneurs, integrated pension services. Brandon, you do not have this headline. Has exciting news to announce that they have acquired, oh God, I got a drink for this, BDS Consulting Group. So William Hackler and Jason Grants, congratulations to you guys for purchasing that company. And I have no idea the size and scope or whatever. Jason actually made me put this in our headlines. So we'll move on. We'll move on from that.
Could you imagine though, Will Hackler coming into your office just with his shorts on and his visor and saying, "Hey,
we're gonna buy you.
We're gonna buy you."
Yeah. This guy only wears shorts, Jason. And
he's not using cool words like you. He's just like, "Hey, man."
He doesn't know what an oligopoly. He doesn't know what an oligopoly is. No, there he is.
Give you 4 baby Ruths and a pack of Twizzlers.
Congrats to Hackler for that purchase. That's awesome. Good for him. Have you guys seen that the Securities and Exchange Commission has raised the $100 gift for financial advisors to $300? So what does this mean now? This means that, by the way,
it means that they understand now that shit's more expensive. So for $100, you can't get someone something.
Fair enough. Yeah. I would argue that now you can take your client to a better golf course. Does that resonate? Is that fine? Does that make sense? No.
That would be, I think, probably.
That's not a gift. That's true, entertainment.
Actually. I misinterpreted this headline originally. I thought it was. I've always been held back on what I can give to a financial advisor, Jason.
Yeah.
I've tried to give gifts to advisors, and many of them say, "Oh, I cannot accept this. It's beyond this amount." But I tried to research that today, and I'm not certain that there's a FINRA rule about that. Am I wrong? Like, do you know anything about what an advisor can accept?
Yeah, no, we're bound by the same thing. So it's funny. I was on a podcast like a handful of years ago, and I didn't have like a decent mic. I just sounded like total garbage. And
like Chad.
Well, like I probably do today too, for that matter. But nonetheless,
you sound great.
You sound phenomenal.
It's great MacBook Pro technology. But so this advisor who I knew, he sent me a nice like a mic, like a USB mic plug, and just pretty nice little mic.
Gift.
right? It's a killer gift, right? And
Thoughtful.
what did I?
The mic.
Mike? And
There's
Mike
a
is
Oh
Mike is
no,
not an
what you
acronym;
said
it's an
before.
That's an
No.
abbreviation.
Before the
abbreviation.
mic.
the
Come on,
connection
guys.
part. What do you plug it into?
Oh,
I
a
don't know.
USB mic. Oh,
Well,
yeah,
there you
yeah,
There you
go.
yeah,
go. Universal
yeah.
serial bus.
By the way,
There you
Jason,
go.
just for reference, unless you're filling that thing off screen where we can't see, that cup should be gone by this point.
Hey, you
Looked like
told
it was
him
on there.
sips at the beginning. It used
Yeah.
to be that we had to take an entire
Saying
shot.
sips.
Now
Sorry,
it's
take
just
it.
sips.
Keep going, Jason. How much are
This
we
was
allowed to throw at you guys as advisors?
this was 5.5 ounces to start with. I don't know. There's maybe 1.5 ounces now. So I better not. I
I think
better,
you need to step it up.
yeah, or
Stay in the
something like
room
that.
tonight.
Hey, how close are you to Dallas, JD? Can you want to come hang out?
Dallas, 3 hours, I think. I don't
He's
know.
just
I'm
gonna
new
hop on his private jet and head over.
here. I'm
Buzz
new here.
over.
Can you send
Okay,
yours to him, Jason?
Was that?
what was
Can
that?
you send your helicopter over to him?
I have no such things. I'm a simple man.
$2 billion valuation.
That's not
Don't
JD.
tell me that. Okay, let's move on. 100 to 300. That's great news. Fun. Let's Jason, do you know what the wheel of ice is?
No. What's the wheel of
Okay.
ice? Tell me more.
You're about to see it.
Gotta be Mark again, right? Or was it JD last week?
I'm not feeling great. I don't want this tonight.
Yes. I fucking do it.
Chad,
do
seriously.
it.
Hey, Chad, I will do it for you if you don't want
Okay.
to.
You're not
I owe you
feeling
one
good.
then. I do not.
Chad's
feel
not
well.
feeling good, everybody.
Yeah.
Okay, in other news,
Thanks, Mark.
I like to call this guy Freddie B. I'll drink for that. Fred
You need to.
Barnstein has come back. He has a new article out there called 401k is an illusion. And let me quote his article here. Time is an illusion. The only thing that is real is the present moment. The past and the future do not exist. But without society agreeing on dates and times, it would be hard to function or understand history. Good point. He then goes on to say, money is an illusion and 401k plans are an illusion. This will come as no shock to everyone, but I just found out that Freddie B, I'll drink again, just got back from a 30-day silent meditation trip. You know, remember when he was on our show?
Okay.
Okay, buddy, slow down a little bit. Slow down. He's really feeling his meditation trip on this blog post he did. My question for our guest is, beyond the whole 401k is an illusion, he talks about 401k 3.0 and the concept of convergence. And for us in the 401k world, what convergence means is we've historically been selling 401k plans through these workplace solutions, right? Through the employer. And now we're thinking, hey, we've got all these participants' attention. Let's sell them some adjacent shit. Let's sell them some wealth management, some financial planning. You know, we've got the best access to all these people through their actual job. And Fred thinks that this is going to change the world. A lot of people in our industry think it's going to change the world. I want to hear from you, Jason Wenk, on as a spokesperson for financial advisors, wealth managers, financial planners, non-401k advisors, what you think about us starting to play in your sandbox.
Well, so first of all, I think there's already been, I mean, to many degrees, I think this is something Fidelity's already been doing for,
Empower's been doing it. Fidelity's been doing it. Yes.
Agreed.
right. So it's actually a bit, yeah, it's probably a bit overdue that, sort of independent players start doing this as well. In many ways, I'd say, like, if you think about the flywheel at Fidelity, it's probably the most like obvious example here where I believe, you guys correct me if I'm wrong here, but I think they're probably like the largest 401k administrator in the US.
I think they're largest in terms of assets under management, check swing, maybe not total plans and that type of stuff, but yeah, I think maybe assets, right?
Yeah.
Right.
And so you think about it, so they have all these plans and all these participants, and then think about what they did to Pantera the last year or so, that they were like, yeah, I don't know if we want these
They
advisors.
shut them down. They didn't let
Yeah,
them
we
have
don't want these
access.
advisors being able to see these plans, because if the advisors can see all these plans, then how are we going to get the rollovers? and then cross-sell all these participants
Yeah.
into all of our other asset management products, our insurance, and
They're
blah, 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 blah,
they're
blah.
they're keeping water in their moat, man.
Yeah.
They didn't want
I mean, I don't blame them, but this is basically what they've been doing. And it's made them my best guess, right? They're private, none of us know, but probably the most valuable financial services company in America, like probably by a lot. I mean, their assets are like, 50% more than Schwab's, and Schwab's a $150 billion public company. So, it's probably not unreasonable to think that Fidelity is a $250 billion private company. It's crazy. And their moat's insane because they've got a flywheel, right? They've basically got all these participants that are constantly coming into the workforce. And then they've got people coming out the back end of the plan into their financial consulting
rollovers.
network, right?
Yeah.
And so they just have this like evergreen structure where they're just like constantly making money, whereas everyone else has to kind of go find a point in time and insert their product there.
Which
They've just said we're going to own the whole life expectancy of the client's financial life. So yeah, I think like for sure it seems logical. I mean,
But Jason, you're talking high level, and I appreciate that. Speak on behalf of the registered investment advisors that use Altruist. Like, should they be getting into the 401k game, or should they be defending against the 401k game, trying to get into their game? Like, speak on their behalf.
yeah. I mean, it's tricky because I'm sure you guys have seen some of the big RIAs. Okay.
Yeah.
All right.
You can say fucker on the show. It's fine.
I have a few times. Don't worry. Those who know me well know that it's just part of my vocabulary. Yeah, Simon's a flat. That's a beautiful image. But yeah, some of the big players, like they've been buying administrators and they're basically trying to create their own mini versions of Fidelity, and you can even argue that that's what Edelman Financial Engines tried to do. Like a lot of people have been trying at various levels of scale to kind of play in both
The
worlds.
convergence. Yeah.
Yeah. So yeah, I mean,
Empower bought Personal Capital
Yeah.
for, correct me if I'm wrong, $1 billion, I think.
yeah, I think it was yeah.
and they've done well with it. To your point, JD, that you mentioned earlier, is why do we keep taking them business when we know that they're trying to pull it away from us on the back end? And I think it's number one, these are very large gorillas and people want to work with them. And when you're looking at trying to set a client up into a plan that they recognize, Fidelity and Empower are two very easy paths to go down. The other thing which you've heard me defend them in the past is most of the registered investment advisors don't want the small stuff that these record keepers are chewing up in terms of
The small accounts. The less than
they want to deal with
100K or less than 200K. Yeah.
And those individuals need help. They
Yeah.
do. And so if the record keepers are going to step in and use technology and try to create some ease for those individuals to roll money into an individual retirement account, then fucking go for it.
Yeah.
Jason,
listen, I would have loved to have bought Guideline, what it's worth. I mean, I brought it up to my board a couple times. Like that would have been a business I would have bought. And for that very reason, basically, like, we have nearly 6,000 independent advisors.
Wait, that was a baller move. Like, I'm psyched right now on what you just said. You would have loved to have bought Guideline. You brought it up to your board. That's very private jet-esque. I like that. To get into the record keeping game is what you're talking about. Like Altruist.
Well, so a big part of it though is that notion of you've got, again, they're still relatively subscale, but let's just say it's hundreds of thousands of plan participants. Maybe it's million. I don't know, whatever it grows to over time.
100,000. Guideline had fucking 60,000 plus plans.
Plans.
Yeah, plans.
Yeah. So they had to have, what would you say that is then, million plus participants?
I was gonna say they average like 15 participants per plan.
Yeah, they were small. They were small plans. But
okay, so that's still 700,000-800,000 participants. Yes. And if that number grows over time and the balances grow over time, but the point on my end was like, I was like, hey, this would be kind of cool also as a mechanism to refer those people to advisors. Because you think about like in our world, we have this like we have a super diverse set of advisors. Like we have an advisor for anything you can imagine, right? If somebody's like, hey, I whatever, like we had people that all they did was focus on like barbers, right? Or tattoo artists or like surfers or literally, I'm not kidding. Like it's
Don't,
like
hey,
anything you can imagine.
if you're a financial advisor out there and you're listening in, don't listen to Jason. Do not focus on surfers. That's a dumb move.
I know, listen, I live in Manhattan Beach now, JD, and
There's no surf in Manhattan Beach, Jason.
in El Porto, you have a bunch of guys that don't know how to surf with their longboards. They pull up
Coop
in
Central.
their Ineos Grenadiers or whatever, and
Yeah.
you know, and all they have is money. They definitely
Hey,
don't have
bro, I grew up in Santa Cruz, California, and Silicon Valley took over my
Oh
hometown.
yeah, man. Lovers Point's still one of my favorite breaks in California. It
That's
was a
over
beautiful break,
Carmel area. Yeah,
Yeah, yeah.
Monterey.
That's gets too big for me. I'm a bit of a sissy, so you know those waves kill people just north of Pacific Grove. So you got to be
We'll talk
careful.
surfing in a bit.
Another day, another time.
Yeah. That I like that. That's very interesting. Let's I'm actually getting a little wasted here, which is good. Let's play a game, shall we? I had an epiphany a long time ago to create the most original and awesomest game ever because I have a much stronger brain than Mark Palmini does. It's the Nope or Dope game. Chad, if you got a dip at some point, you dip.
I was just about to type. I'm so sad I'm going to miss the article.
We don't need you anymore, Chad. You're fine.
I know. Doesn't mean I don't want to learn.
The way this game works, Jason, because I created it, so I would know, is that I'm going to ask you first, as our guest, a question about pop culture, things in the real world. You're going to let me know if you're nope on it or you're dope on it, and you're going to tell me why. Okay. This is a little edgy episode of this or segment of this. So, Adderall, the drug. Adderall.
Okay.
Are you nope or dope on Adderall, Jason? I heard
Personally,
it could be quite
I'm a
effective.
nope. I don't need it, but you know, God bless those people who do. You can drink a lot more alcohol on Adderall, I've heard.
What?
Oh, didn't know this. We just
Yeah.
learned something new from you.
I'm not sure I want to drink more alcohol, though. I'm a
Let's
cheaper
put
date
that-
when I can.
Let's put that on LinkedIn tomorrow. Jason Wenk of Altruist says,
I've never partaken, but I have some
"Oh
friends.
no,
that are
we're just gonna
pretty-
clip
they're
the
pretty
first part.
material
We're
Adderall.
gonna leave
Yeah.
that part out, Jason. We're gonna clip the first part." Adderall apparently is people are like very productive on this shit. Justin, you're an edgy young guy. Adderall.
What? I mean, I'm all for it. I had ADHD as a
Of
kid.
course.
They wanted to subscribe it to me, or they were thinking about it. But hey, if it helps, it helps.
And Chad, how long have you been taking it?
I've never touched an Adderall pill. Not once in my life.
I never have either.
Mark,
Wasn't needed.
You speak for the people. Hey, I'm a little distracted. It's hard I'm not Jason Wenk. I can't start a $2 billion company. If you can give me a magic pill to help me out a little bit.
Well, the way you're positioning it now makes me think that maybe I should start using it. So I don't know. I'll let you know next week.
Okay, great. Mark's sales numbers are going to go way up.
Yeah.
You won.
You can't go any lower. So
Actually, you guys are crushing it. Okay, next Nope or Dope to you, Jason, on the same trend.
Oh,
And this is
gosh.
a big one. Zins. Like people are packing tobacco in their mouth, and this has infiltrated financial services. Like I am playing golf with guys now, advisors, and this is a constant thing I'm seeing. I'm a 54-year-old old man. I don't get it, but Zins, Nope or Dope.
I mean, I'm a nope, but I have a 25-year-old son, and he's like a double dope on that.
Yeah,
one.
there you go. Right.
He's probably going through 3 tins a day.
My youngest is 21. I've got 2 older daughters. My youngest is a son. He's our internal sales consultant, and I'm feeling like there's a circle in his pocket at times. I need to watch him a little more closely, but I'm going to go back again, same kind of topic to Justin, Silent J.
No,
Nope
I
or
think
dope
it's,
on-
no, I'm nope on that for sure.
Why? Explain why. You want a little nicotine in your life? A little zip?
People
a little.
Addicted. Jesus.
You could be just like Tucker
Go
Carlson.
back to a cigarette.
Yeah, thank you,
not my
Jason.
thing.
I didn't want to go there. I've heard Tucker Carlson talk about like, this makes me a superhuman.
Exactly. Yeah.
Chad, have you ever put one in your mouth?
I don't know if I do not. I don't use Zen, but I do and at times use grinds, which is coffee grinds in a pack that you can throw in with. It's got some touring in it.
So that's caffeine.
I think it's
but
more
there's
annoying
different-
than anything.
There's no
This is
nicotine.
nicotine.
Yeah,
Mark,
so
have you
I'm
ever
obsessed with that shit?
have you ever in your life put a Zin in your mouth? Don't lie.
No, I
Okay.
can tell you I haven't.
Me neither.
Yeah, I'm not. It's not me. It's not. I can't do it.
I think that's Brandon chiming in. I want Adderall Zins. I agree. All right, Jason, you're in Texas, and this is the guy who thinks he's fancy because he bought a ranch in Texas. Are you nope or dope on skid steers?
Oh, very, very, very dope on skid steers.
Yeah.
I'm
So
from
would
Michigan.
not be dope on a skid steer.
Yeah, dude, come on,
Thank
man.
you. It's a consensus. Everyone agrees. We'll go
So
to the
you're
next
going to
one.
buy one, aren't you?
They're fucking like 80 grand, bro. Like it's no joke, but I really do want a John Deere skid steer. Like that's my dream right now. So
JD, you can come up to my farm in Michigan sometime. I own so much farm equipment and farming shit. It'll blow your mind.
Jason,
Grab-
I'm starting to fall in love with you on a lot of levels.
Be careful.
No, sir,
Starting
but-
to.
Restraining order.
Okay, last one, and this is straight to Jason and only Jason, because we know how everyone else feels about this. Nope or dope on Nate Moody's hot sister. All right, we'll move on. Okay.
I saw the chat
Oh.
comments, and I mean, I don't know. I mean, I don't. Can you drop a pic in that thing for me? I
Someone
mean,
can. Come on, someone throw a link. Throw a link.
All right, I'm out.
See you,
See
buddy.
ya.
See you later, Chad.
See you
See you later,
guys.
Chad.
Thank
Okay,
you so
let's-
much, Jason.
Jason, let's
Yes.
kind of wrap up with the I'm gonna call it juicy drama. Altruist, very successful company, obviously, on your way to big things. But now you got this, what I heard some media call your side project, which by the way resonated with me because I have a side project, AI company called Waves. And so you have Hazel, but
Careful,
you are
JD. Jason's
Yep,
going
yep.
to buy you. He will buy you tomorrow.
he should actually.
You
and
think
so-
Guideline was at a
right?
discount? Yeah.
You are vacationing in Mexico with a advisor buddy of yours, slash, I think he plays a role at Altruist too. But you're hanging out with your buddy in Mexico and news breaks out. And I'm going to read from this. Altruist spooked Wall Street Tuesday, February 10th. After analysts zeroed in on the firm's artificial intelligence powered tax management software, they saw it as a disruptive innovation that could eventually upend, listen up, people, upend wealth management. That triggered a sell off of Linscomb Private Ledger Financial Holdings, down 8.3%. Raymond James down 8%. Schwab, sorry, Chuck, down 7.5%. Jason, somehow your release of Hazel is some kind of snowball down the hill moment for artificial intelligence and the use amongst financial advisors. Did this catch you off guard in Mexico? And what the fuck is going on?
Yeah, man, it's a cool week. So by the way, the not that I don't want to be like, I'm not like the Grim Reaper or anything, but $120 billion of market cap got wiped out in 3 days because of the
You
Hazel
are the
release.
green. Why are you smiling when you say that? You
It's
sick
pretty cool,
fuck?
man. It's pretty cool.
Think about it.
Unless you're a shareholder of those companies or an executive entering to your.
They're gonna get it back. It's
Yeah.
all gonna come back the other
Maybe
way.
not.
It hasn't so far. Hasn't so far.
Oh, you're
It's been
keeping track,
it's
huh?
been 9 days, and things are still down 100. At one point, they were down 135 billion. They've
That's
gotten 15
so
billion back.
odd. Jason's proud
Yeah.
of that right
No,
now.
no, no.
He's got to be the biggest guest we've had on the show at this point, right?
No, no, no. listen,
Seriously, when you're in Mexico, were you caught off guard? You didn't see this coming.
yeah. So let's talk about Mexico. So first of all, have you guys been to Zihuatanejo before?
No.
No, I've been to some fancy Four Seasons resorts in Mexico, but not the one
This
you're
is not
talking about.
fancy. This is like where you go to on a surf trip, right? Like it's like San Pancho if you've ever been there. It's good. Yeah, Shawshank. Everyone knows it from that. Anyway, so Epic Place is basically like two-thirds of the way between Puerto Vallarta and Acapulco, and you've got like a killer bay for chilling, and then you've got like really good waves off from the kind of like a south, kind of facing jetty that the kind of bay comes off from. So anyway, water's warm, it's killer, it's chill. Anyway, so I was only there for a few days. It was supposed to be like a quick kind of 3 day getaway, get a direct flight from LA. And I had like one just super chill day, and then day two I did like a little morning run, little morning swim, went to get some breakfast, and I look at my phone and it just
I mean, can
blew
you,
up.
Mark? Sorry, Jason. Hit pause for a second. Mark,
Yeah.
can you imagine him? $2 billion valuation entrepreneur in Mexico it's classic, right? The morning jog, the morning swim, then a little cappuccino. Okay, continue on, Jason.
I don't
No,
drink. I've
I'm
never had
not. I'm
caffeine.
not picturing a cappuccino at all. I'm
Yeah.
picturing like Corona next to like some eggs and beans and some
I just
fruit.
want to know,
Yeah.
Jason, were you in a Speedo or one?
It's a nude resort, bro.
You got the news. You got the news.
It was a very basic, but so I got the news, and the first thing I had this text from a reporter at Bloomberg, and I was like, "Who's this person? Like, how'd they get my cell number, right?" And so I then get some text from some friends and some people, and I actually got sick to my stomach when I first saw the news because I was like,
Oh,
"Oh
wow.
man,
Oh.
like."
What happened?
Well, part of it was like,
You weren't trying to break things. You didn't
oh
want to
hell
like.
no, yeah. I mean, well, so part of it is like I started to kind of worry. I was like, this might really upset some people, obviously, and
Right.
some probably very powerful people are not going to be very happy. We didn't intentionally, obviously, like try to like cause a global market sell-off in financial stocks. Um, so I was a little bit like, and it just felt like honestly, it didn't feel like it was real. It felt like it was like a crazily well orchestrated joke or something like that. And then I called the reporter from Bloomberg, and it was very real. And so then my vacation was over. So it lasted a day, and then basically had to work the other day and a half, and then flew home.
What kicked it off? Like certain users? Like how did it snowball to the effect where?
Well, yeah. So basically, my understanding is that it started happening within the Bloomberg terminal. So Bloomberg terminals have a chat function, and you can message other users, and you can share research documents, things so forth. And so there started basically I call like Bloomberg terminal chatter around like, whoa, have people seen this release? And then and then it started to kind of like turn into this much bigger story like, okay, well, who is Altruist? Like nobody had heard of us, of course, like we're still relatively small, right? And and so then when they started looking at like who we are, they're like, wait a minute, this is actually like a B2B company. So this is the significance that I think even a lot of the stories missed it, but basically the gist is like an AI tool is not going to like crush Linsco private ledger, right? Like AI. Okay. 12 acronyms here.
One more.
He went for the Linsco private ledger and
then
I got the other one.
artificial
He
intelligence.
sandwiched it between artificial intelligence.
Yeah.
Hey, no, sorry, I don't want to interrupt you, but I'm just curious because you were like, "Oh, here we go, back to work." Don't you use it out of office?
No, not really. So by the way,
The
so
ballers don't, Mark. The ballers don't.
No, but
I was about to
listen.
say, can't you just be like, "Yeah, that's great, things are going on, but I'll get back to it."
Greg G said it. I'll drink. He's a founder, bro. They're badass. 24/7.
Yeah, it's intense. But by the way, I think of this every time I dropped it like a shitty link in the chat. But do you guys know? Do you JD? Do you know Frank Kern like personally? Do you know who he is?
Oh, Frank Kern? I have no idea who that is.
Do you, like from the first time I ever saw your mugshot pic on social, Frank Kern, Kern, Frank Kern.
Close, Greg.
We'll check it out. I don't know.
Google
He must
Frank Kern.
He must be a very handsome man.
Very handsome. Very handsome. Frank was my business coach from La Jolla. Great surfer. Back in like the
Hey, I was the La
2000s.
Jolla High School surf coach back in 1996,
Frank's
FYI.
legit. Frank's like your age. And dude, you guys look, you're basically his doppelganger. You guys basically look like that's this image that pops up right here.
For your information.
That may as well be Frank Kern.
Okay.
May as well be
Can
Frank
I
Kern.
can I ask you about
That's
this?
Frank Kern. Dude, does that not make you guys freak out?
Wow.
God damn it. I tried to suppress that personality of me. And,
Seriously. I love it.
what if he was my gay lover? Okay. No, what I want to know is we all know that artificial intelligence exists. Like we get it. We're seeing it on the news. And when I say we, I mean the financial services industry. Like we totally understand, I think, at least, because I have a company that's focused on this, just like you. Why is it so shocking all of a sudden? Why did Hazel create this moment that I'm starting to feel like everyone's all of a sudden is going like, okay, this is going to be real. Like financial advisors are actually going to use this shit. Cause I'm kind of sitting here going like, no shit, man. Like, of course we're going to use this. But somehow you had this moment where people now believe, I'm talking in general sense, a lot of people believed that, okay, wow, this is coming. Like Hazel is somehow an example of that advisors are actually going to use this stuff. So maybe you can kind of weave into that what Hazel actually is. And I want to dive into this a bit.
Yeah. So yeah, I'll try to be like kind of not ramble on here, but what I would say is that the first tools that advisors used, the first artificial intelligence tools advisors
There we
used-
go.
Yeah. Finally, it takes a couple hours on it. But the most common one was a note taker. So right, it would join your
Yeah.
meetings, take some notes, blah, blah, blah. Exactly. But if you think about like the productivity gain from that, it's actually pretty nominal.
Oh, it's cool.
Like,
It's great. It's
it's
great.
cool, but it's like if you think about it, it's like what's the real like return on that? It's not actually that high. It's like because Michael Kitces had this one article once where he's like no one was taking notes to begin with. So all that these note takers did is they started taking the notes that the humans weren't taking.
Taking in the
You know,
first place.
So it didn't really it didn't like create a return. It's not even saved any time because they weren't spending any time on notes.
But to
anyway.
counter Kid says, and he's a past guest on the show, I actually derive a lot of value from some of those Zoom artificial intelligence summaries. If you look at them from the right lens, it can be very valuable in terms
Totally,
of yeah.
So,
But
so here's the
anyways,
thing, right? So what I'd say is like like those are the first tools, got some broad adoption. Again, they're not helpful, right? Like they're useful. But if we were actually doing like some type of return calculation, we'd find like the return is, again, to your point, yeah, they're great. But it's not like these things are 100x returns. Like, right, the note taker is a nice efficiency and it's incrementally
yeah, a nice little
better,
supplement.
right? Right. So I think the thing that made Hazel kind of jump out is the way we built it from like an architecture perspective. Again, we'll bore the like schematic here, but is what it's doing is if you drop in a tax document or any document, it also synthesizes all your data across every connected platform. It will parse and read the document. Step one. Step two is it will then, after understanding the data, it will search the internet to find like sources of truth around that data. So like the IRS, right, Internal Revenue Code, state test state laws, municipal codes, blah 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 blah. Right, 50 to 100 different sources.
Vetted sources.
Yeah, anyway, I must have said something there about
Internal Revenue Service.
I thought that was a real thing. I thought it was just three letters, not a real actual thing. But so in the end, like getting to the point, what Hazel will do is give a really, really good tax analysis. So it'll summarize, give you analysis, and it will tell you what to do to make your taxes lower. And it's in every single time it creates an output, it's custom. So once it does the synthesis, like the taking of all the data, it literally writes code in Python specific to that unique situation for that client to create a bespoke, like one of a kind tax report for that client. So unlike other tax software, like you transcribe a shit ton of data and then you get the same canned thing.
Yeah, right. You're basically, I'm hoping not to
Drop your tax return in, JD. Let's get you on there. I want to see what
Not
happens
to
to your
not
tax
to
return.
promo. Oh, it can't handle my tax return, but not to promo. Not to promo.
JD hasn't filed one in since 2014.
Not to promo my own company, my partner Tony. I don't know if he's online here, but your whole like Python coding thing like really resonates with me on what's going on here. But what I'm hearing from you is SaaS. Oh shit, I'll drink for that.
Oh,
Software
yeah.
software as a service is something that as business owners we've always bought and paid for and subscribed to for so long to solve so many of our business problems and give us like tangible outputs. I don't know if everyone understands this. I know Jason does. So I'm going to help you. I want you to try to explain this to them. Is this AI engineering and development kind of like, it's kind of taking the place of that, isn't it? Like now we can make things, and maybe we're making software. That's fine. We're making software that's built by and backed by artificial intelligence, but we're kind of at a precipice where that whole chessboard's being thrown over and starting again. I know with Waves and what Tony's doing, we're building software solutions that would have taken me months, maybe years, and I would have to contract it out to people in, a foreign country or whatever to do it affordably. And now we can build this shit in a matter of days or weeks. Does that resonate with you?
Yeah.
What I'm saying?
So I'd say like, I like two thoughts on that. So one is you're dead right on like development in general. I would not want to be, if you think of like using like Kitsis again, bring him back into the conversation, right? He has that Fintech solutions map that has like
All the
100,
conferences,
like 1,000 different logos, right, of all of these software companies. And look, I wouldn't want to be any of those companies. Almost everything on there could be rebuilt and replaced in a matter of weeks,
by
and be
anybody,
custom.
really.
Yeah,
Not by anybody. You got to know what you're doing.
I mean, yeah, look, or again, if you think about like, so the way Hazel's built is each one of those products is effectively an agent, right? So we built, our first agent was a tax agent. What does it do? It analyzes tax returns and other tax documents and synthesizes all your account data, positions, tax lots, qualified plans versus non-qualified plans, and it gives you very custom, beautiful data. The output effectively would be something you maybe in the past could have gotten from like Goldman Sachs private wealth management, paid tens of thousands of dollars for, and a dozen people worked 100 hours.
Yeah.
And Hazel does that for $125 across your entire business. So
we're just humans,
like
bro.
a penny.
Like we're only capable of so much.
Yeah.
Like,
so I think you're right. Like one,
That's
software
very
development is
true.
easier, and two, the output, like the cost to do something that is effectively like the 99th percentile of quality and output is now 99% cheaper than it was before.
Right.
It's incredibly disruptive, and this is why those stocks all craters, because they're going, how in the hell are these companies going to charge the prices they're charging, considering now AI can do their job better than 98% of the people for 99% cheaper.
Yeah, so you just referenced really quickly that like software stocks got fucking hammered recently, right? In the stock market, based on everything that we're talking about. But can I ask you on the more positive side? And this is cliche. I apologize, but I think we need to repeat it for everyone listening in. Is artificial intelligence as like the job destruction thing? Like, I'm assuming you're in the camp of no. Hazel doesn't ruin financial advisors' jobs. This allows financial advisors to be way more fucking efficient, productive, scalable, valuable. Is that your vision for artificial intelligence and financial services? That this is going to make us better, not take away our value?
100%. So yeah, look, my biggest gripe in, by the way, go Pistons, whoever's had to run to watch them destroy the Knicks. Anyway,
Jesus, I can't keep up on the fucking sports. I got to schedule this show around.
but
The team, go sports!
Yeah, go team. I love it. So you're right. What I would say is like so the founding premise of Altruist, right? So our motto, if you like to paint it on the wall, was to make financial advice better, more affordable, and accessible to everybody. I grew up in like a relatively poor family in a farming community in West Michigan. Nobody I know has any money. Like I never met anybody who had any real money ever in my life growing up. And if you think about financial services, I think I said financial. Is that the no word?
Yeah. Oh my God.
Yeah.
Mark's off the
Oh shoot.
trigger.
Oh darn.
Got it.
Anyway, a big gripe with our industry is like you could say like most things are hard to get access to. Like if you're not already rich, like how do you get
That's
access
fair.
to a great planner? Uh, the costs are kind of high. Like who wants to pay 1%, of their assets, for all of eternity, compounded, at market growth rates
That's
for
not going to
decades, right?
sustain
Yeah,
itself.
right. And then the results are inconsistent. I mean, like some people have good experiences, some have bad experiences. Like it's like hard to deliver consistent experiences. So what I love about tools like Hazel is that it makes really, really advanced tax planning available to anybody. Like there's no like friction point where you'd say,
But Jason,
too
can I
time consuming, you need a bunch of money.
Hazel's not direct to consumer.
No, no,
This
it's
is
for
an
advisors.
advisor tool, right? Like
100%. Yeah.
yeah.
So the idea is like, look, I want advisors to no longer have to make compromises. Like most advisors might say, look, I can only serve 150 clients or 100 clients or whatever their
Right,
like,
right.
their limit is. And the reason is because all the stuff they do takes too much time,
Yeah.
you
Okay.
know? And so like
You're
obviously
back.
the tax tool,
I apologize to interrupt you,
no,
but
no,
that's
no,
what
no.
I do. Um, so what you're
True.
saying is you're agreeing with me in that. No, it's efficiency. It's allowing an advisor maybe to, instead of having 100 clients, they might end up having 300 clients someday because of the artificial intelligence tools that they use and work with. Right? I mean, it's not going to kill
Yeah,
their
totally.
job. It's going to make them better at what they do.
100%. And the other thing too is that like think about what you just said about software development. It used to be you had to go study computer science, maybe have a master's degree in computer science and learn object-oriented programming. And it was like mythical to the normal humans, like building software. And now
Mhm.
you can just go say, hey, I kind of want to have this thing built, like go build it for me.
Yeah,
And
right.
like a 90% complete version gets built for you in 5 minutes.
And you figure it out.
So if you're in the past, like if you were a financial planner, um, sorry, I finally finished
Oh,
this.
that was a good word. See, bam.
Yeah, that is a killer word. But so anyway, so if this is your job, you don't have to be a CFP with 20 years experience.
Oh,
Another acronym. Guys, what's going on here?
we're almost done. We're gonna wrap
What's
it up.
going on here is
We're gonna wrap it up.
a episode record, Jason.
18.
Uh,
No, he's not
Getting
near the
close.
record.
I
No,
actually,
we reset
bro,
it every year, right?
I
but
hear
listen,
you. I hear you. The
a pretty good planner can now be like a 99th percentile planner. Like they're going to have all the tools, and you don't have to be like in New York or San Francisco,
but
whatever. Like you could
Jason,
be like
there
anybody in your elite now.
that planner isn't gonna no code. They're gonna rely on people like you to build a product for
Yeah,
them, right? I mean, so but
consider it
I'm with
done.
you. I'm totally with you. I feel like the world is changing in a fast way in terms of software. I don't know about your businesses, but I have a small business, 35 employees. We talked earlier, north of 5 million in revenue. I probably spend over 6 figures on software, probably a lot more than that, like in
I'd
the high,
imagine.
and so I'm already hitting moments right now with artificial intelligence because of my other company where I'm like, wait a second, we just built that for a client over there. I could build that for myself and relieve myself of a $40,000 a year bill that I pay for this or that. So I just want everyone listening in to like pay attention that things are changing, and back to the Hazel moment. Thank God that all these reporters and news people think this is somehow like this moment where everything shifted, because I've been waiting for this moment, Jason, of like, when are we as financial advisors going to say, okay, this is not just a fun topic to talk about. Like, oh, do you go into oh God, chat GPT to like help it write you an email or a blog post? that used to frustrate the fuck out of me. Like, that is not artificial intelligence. I mean, it is, but I'm like, but we can do so much more with it. So think of all the software you use, all the outputs, all the tangible things that you're giving to clients. And so kudos to Hazel for creating that moment, I guess.
Well, thank you. But by the way, I would say like on the so if there's one takeaway, like I would say for anybody listening, or you guys, or any of us that are building, right, is that the market's not that interested in incrementally better things. So if something's 10 or 15% better, it's not going to move the needle. That this is why like there could be thousands of products built and no one really notices. It doesn't make much of a difference. What artificial intelligence has to do in order to like make this really big monumental impact is it has to do something that's radically transformational. So like I would key in onto like how I mentioned, can something be like orders of magnitude? So can something be like 2 or 3 or 4 times better than it ever was before at like 99% lower prices? So I mean, it is so disruptive, you cannot ignore it. It's like the Seth Godin purple cow, right? It's like it's impossible to ignore because like even the core Altruist platform, like we've digitized everything. It's beautiful, it's elegant, it's really easy to use. But I could probably make the case that it's 20 or 30% better than other custodians. And that's enough to win new entrants.
Yeah,
like
right. So that's a regular business model.
Yeah.
That can succeed. You're seeing the new world that
AI products build something that is 200, 300% better and 99% cheaper, and you will win for sure.
You and I will have to talk offline. I could go into the night hours. We won't. We'll wrap this up. But I mean, I want to know like what you built it on. My understanding is that it's not built on a particular large language model. You can kind of toggle between what you want. We're doing the same thing at Waze, where our users can decide whether they want to use Claude or Anthropic or Gemini or what have you. But anyways, you and I will have to talk offline.
Yeah,
sorry, everyone. Let's wrap this shit up, shall we? Updates. Chad Johansson, he's not here, but Brandon, could you put up his the creepy photo we like of the movie character guy? He is doing a webinar next Tuesday. This is a housekeeping moment. I'm wasted. Tuesday, the 24th of February. Yeah, that's the month we're in. At 10 a.m. Pacific. Chad will be doing our 401k expedition webinar. So tune into that. RSVP. If you can. And then Mark's going to be doing one, actually, Road Guide, the week after that. So pay attention to that. And our next Retireholics show will be March 5th with Steve Wilkinson, the founder of K-Quote and now 338 Investment Fiduciaries. I'm excited to have Steve on the show. But thank you to the audience that tuned in tonight. Thank you to the people out on YouTube and X and LinkedIn and whatever watching this show later on. We love you. We appreciate you. Even though it's a little weird that you are into 401k, but we're okay with that. And mostly, yeah, thank you to you, Jason. Fucking A, bro. To come and spend some time with us tonight from your little dingy hotel room in Dallas. We really appreciate it. I have to say, there's a couple of things, me and you, that differentiate us. One is, why did you cut your hair and shave your nice little beard you had going on? Like that's a bad call. You shouldn't do that.
My beard's turned gray, but I'll probably grow my hair back out.
Look at that old guy. Look at them there to the left. So
dude,
beautiful.
that's what happens when you start companies and you raise a bunch of money and you work 100 hours a week, man. Yeah. You go from looking like that 5 years ago to looking like me now. But I'll grow the hair back out, man. It'll give me 12 months. I'll be
please
right
do, please do. And the only other difference between you and I really is that my company is profitable and yours is not. Thank you, everyone, for tuning into Retireholics. We will see you next time. No, Jason, seriously, thank you so much. We really appreciate it. Great time with you tonight. We are the Retireholics. We are changing the retirement plan industry one beer at a time. See you next time, motherfuckers. Peace out.
Cheers.
Thank you,
Brandon, play
Jason.
some music.
guys.
Jason, thank you